Hello, and welcome to your Daily Five. My name is Greg Harmon. I'm the founder and president of Dragonfly Capital Management. At Dragonfly Capital, we manage money for clients using technical analysis and options overlay strategies to create leverage and manage risk on stocks that we believe are going to continue to move higher or lower. We do this in separate accounts held at Interactive Brokers, so you can see your positions and see the activity and any reporting you like 24/7. We also sell a subscription newsletter for the do-it-yourselfer that wants to manage their own investments and learn a bit about technical analysis and options trading along the way. Find out more at dragonflycap.com. Today, we're going to talk about a phenomena that seems to be eluding many in the market, and that is the fact that stock prices are actually going to all-time highs, and they don't stop. They have not been stopping, despite the numerous discussions about a pullback or a slowing of the economy or a soft landing. It is not happening, and the charts are telling us that. First chart I wanted to show you today is crude oil. Crude oil, which is often correlated with economic activity, because as economic activity grows, there is a greater need for fuel and to transport and to build. And we see that as we look over the 2021 to 2024 period, we saw a big spike there in 2022, and it's fallen off from there. But we've generally been getting higher lows in crude oil. We've got a bit of a momentum reset here on both the RSI and the MACD on these monthly charts. And strong support, it seems, at the 200-month moving average, which is just below where it is right now. So crude oil is kind of telling us that the economy is not slowed down, is not going to start crashing. It's kind of settling in. Next, we've got gold. Gold, we can see here, has been consolidating and creating a tighter consolidation pattern underneath all-time highs. We see momentum is building on the MACD, that is starting to get up into a stronger zone. And with those tight candles up there, as long as we don't see the RSI roll over, looking for gold to continue on and start making new all-time highs above the closing high of 2095. That is what we've seen in the past. This is neither a positive or a negative for markets. It is more of a, I think, a issue in terms of looking at the size of the deficit and the size of and the direction of the U.S. dollar. So this is telling us, with gold moving higher, that the dollar should be weakening a bit. And if we move on to the dollar, we see that it has weakened from its 2022 peak. But it is still hovering right around the top of that box, that 7-year box of where it held out from 2014 into 2021. So a little bit above the range and even into 2022. Not giving it up though yet. The dollar is not giving it up yet, and still holding right at that 104 level, which seems to have been a really key level over or let's say the range 101 through 106, a really key range, tight range, over the past year and a half. So if we're going to continue to see strength in U.S. markets, I would expect we're going to start to see that dollar start to weaken a bit too. And that would be expected if we do start to see the interest rate cuts that the market's anticipating. Bonds. People seem to get excited every time bonds start to rally a little bit, but you can see that since 2020, since March 2020, the trend in bonds has been lower. We've been making lower highs and lower lows in what I'm calling a cyclical downtrend. And momentum really has not come off the bottoms here. With the move back down in February, it looks to me as if bonds are just continuing to move lower, so rates moving higher. Which brings us to the stock market then with that backdrop. And we closed out, I just caught a little bit of the March candle this morning. It was a little slow in booking this chart, but you can see the February candle there. That is not a candle that shows anything about the market slowing down. That's what we call a Marubozu candle from the Japanese candlestick practice. One that opens at the low, drives to the high, and it's a big candle and sticks at the high. And that's what's going on here in the Nasdaq. There is no lack of strength in the Nasdaq. So I'm not looking for the Nasdaq to slow down anytime soon. And then sneaking in here, my sixth chart, the S&P 500. The S&P has a longer scale on it here, so you can't see that same thing, but you have that same Marubozu candle for the month of March in the S&P 500. Added in here some Bollinger Bands as well. You see they're expanding and price is riding the Bollinger Bands higher. Momentum is moving up. It's nowhere near the peak on the MACD that we saw at the end of 2021 that led to the pullback that we have. We've now completely retraced the 2022 pullback. And we've got an RSI that some people will tell you is now in a divergence to the downside, but I don't think you can call it divergence while it's still moving up. It is strong in the bullish zone. This to me as well looks as though there is no slowing down in the S&P 500. And we've seen it now that the S&P is already 5% above what analysts thought the end of year target would be. And now they're starting to raise their targets up to 5,400 and some, I saw one yesterday as high as 6,000. Not going to make a call on that. That's not what I do. I'm just going to tell you that everything points to higher at this point. So there's no reason to slow down at this point. And that's your Daily 5. Thanks for watching.